with Rob Keldoulis. I am Ainsley Harvey, and I am the manager of the Macquarie University Incubator Space. Our team, we're from Sydney, obviously. We're in lockdown. Everyone's working from home. I hope everyone's doing well, and I hope this hour that we have here today with Rob really gives everyone that energy and uplift that we all need right now. So before we begin, I would like to acknowledge the traditional custodians of all the lands on which we are meeting today and pay my respects to elders past, present and future. Given this is a Zoom meeting, we are all on different traditional lands. I'm coming to you from the Sutherland Shire, and I am on Dharawal land. And I would invite everyone here today, if they know the traditional name of the land that they're coming to us from today, to put it in the chat bar. It's great to see that diversity and recognition of the Indigenous names. Now, just before I hand over to Rob and Mel to do the interview, I wanted to show you a picture of the incubator. If you haven't been there before, this is where we normally live. It's a beautiful building on site at Macquarie University. We have over 30 different startups with us at the minute. We run student programs, we run researcher programs. It's a really great space. If you haven't dropped in, or if you're interested to know more, I'll drop a link into the chat bar shortly. Okay, so without any further ado, I'll hand over to Melissa Ryan. She is our Director of Incubation and Entrepreneurship at Macquarie University, to introduce Rob. Thanks, Mel.
Thanks, Ainsley. I'd also like to take the opportunity to acknowledge the First Nations peoples of Australia and elders past, present and emerging. And as Ainsley said, I'm Melissa Ryan. I'm the Director of Incubation and Entrepreneurship here at Macquarie Uni, and I'd like to welcome you to our Leaders, Innovators and Disruptors event. I'd also like to thank Macquarie Centre, who is with us this year to deliver these sessions, and one of them being today's. So thank you very much, Macquarie Centre. So today we're in conversation with Rob Keldoulis, the CEO and founder of VivCourt Trading. And I'd like to give you a little bit of background on Rob, so that people who don't know much about him get a little bit of an understanding. So in the late 80s, Rob graduated with a combined commerce and law degree from University of New South Wales. And from there, he went on to commence his career as a trader. And this being due in no small part, I understand, to the significant difference in wage disparity between the two career paths at the time. So someone starting in trading was getting a significantly more than someone starting out as an early stage lawyer. So from there, Rob has seen a lot in his time as a trader. He survived the crash in 1987, witnessed a dot-com boom and bust, and now the rise and fall and rise again of cryptocurrency that we're all witnessing. In 1995, he founded Optiver Australia and spent 20 years trading both here and in Amsterdam. His success brought him wealth, and with it questions, which we will dig into in this conversation. Since exiting Optiver, Rob founded VivCourt Trading, a social enterprise in the financial services sector. VivCourt is Keldoulis' way of turning trading, a business which is pure capitalism, into something designed to generate impact funds to do good. On the surface, VivCourt Trading might look like your average financial trading firm, but you just have to scratch the surface or chat to anyone that works there to know it definitely is not. VivCourt has taken the trading corporate business model and flipped it on its head, and it has challenged every aspect and come away with what Rob believes will evolve into the only sustainable corporate model of the future. So welcome, Rob.
Thank you. Thanks for the blurb.
Yeah, I hope that was all fairly accurate.
Yeah, relatively.
I've just been scraping the web, obviously. So I suppose we'll kick off today with our first question. So you've had many worldwide experiences, and one of them was traveling with His Holiness the Dalai Lama over a period of 10 years. And how did you find yourself in this position? And what did the Dalai Lama teach you about money and happiness? We'll start off with a small question.
Big ones, eh? Yeah, I sometimes wonder myself how I ended up with the Dalai Lama, because I was not a practicing Buddhist at all at the time. he was running a conference, a Buddhist talk, a 5-day Buddhist retreat in 2008 at Homebush. And my wife said we should go out to listen to it. And I thought I couldn't have thought of anything more boring. 5 days, an esoteric Buddhist teaching at Homebush, where you had to travel out there every day and travel back. So we ended up going, of course, and I got to know the organisers. And one of the days I was there, I was standing to one side of the stage, and the Dalai Lama was about to turn up. So they said, "Would you like to meet him?" I said, "Of course, who wouldn't?" So we went backstage and we met him, and it was not an epiphany in that sense, and it wasn't something that sort of changed my life at the time, but it was a significant enough trigger to make me want to look more into Buddhism. And then a spot became available on the board, which was the organization which used to invite His Holiness to Australia. So the Tibetan government in exile has an embassy, well, an equivalent of an embassy in Australia, because they don't have a recognized state, and it's called the Tibet Information Office. So they would not want to organize the visits because they didn't want to have any legal liability. So they had set up a separate organization that would actually invite His Holiness out here, and we would manage the trips. And so I got onto that board, and for the next almost 10 years, he came out every 2 years, and we would travel with him, and we'd arrange all his visits. You would get up, you'd have breakfast with him, you would travel with him for the day, you would go to every meeting and appointment, public talks, lectures, philanthropist talks, meeting with religious leaders, and then you'd have dinner with him, and he'd go to bed. So you got to see him as a human being, as a person, rather than this sort of spiritual figure, as well as all the spirituality that was with him. So it was almost by accident that I ended up traveling with him.
Well, the best things in life are usually accidents, aren't they?
Yeah. And he used to really, one thing that the Dalai Lama really wanted to do, like, he was very big about interacting with the business community. And the business community was very keen to meet with him. And somebody asked me yesterday, what could the business community possibly learn from the Dalai Lama? Like, he doesn't know business. He doesn't have any money. He has no influence. There's no economically influence. Like, if you actually think about the Dalai Lama, he has nothing. He has nothing of any value that traditionally that a Western government or a Western power would want. There's no economic significance to Tibet. There's no geographical, there's no military, there's nothing financial. And yet, for 60 years, the Dalai Lama, who has literally nothing, he doesn't even have a passport. He lives in India, and all he has is an identity card. So he has literally nothing. And yet for 60 years, he has had the ear of Western powers and Western governments. He is an honorary citizen of America, of Holland, of England. He alone stands before the Chinese government. He's the most recognizable face on the planet, and he has nothing to offer, like literally nothing. Normally Western governments, and if anything, when you associate yourself with the Dalai Lama, you only bring trouble upon yourself. So governments that do receive him often get sanctions, or development projects are pulled, and yet they still meet him. And you kind of wonder why. What is it that the Dalai Lama has that will have a Western nation stand up and incur the economic wrath, or sometimes the military wrath of China? And so I wonder about it. I wonder what it is. And on his very last teaching, on his last time he was in Australia was 2015. He's pretty old now. He's 86, so he can't really travel much. And in 2015, his last speaking tour was in the Perth Arena, and it was filled. It was 12,000 people, and every seat was taken. And he's this little old man. He's 86 years old. He speaks terrible English, struggles with the Australian accent, and he's sitting on the stage, and he has a cup of tea, and he's banging on about the same things, about human kindness and compassion, and we're all one people. And so there's no one message. You'd normally go to those things, there's no graphics, there's no music, there's no takeaways, like you write these 5 things down and you'll achieve enlightenment. There's nothing. And 12,000 people are riveted to him. And you wonder what it is. And for me, I think what it is he's authentic. He's one of the last living people in the world that carries that degree of authenticity. If he meets you, if he's talking to you, he's the same person that if he's talking to President Obama or he's talking to a homeless person in the street. He wears no label. There's no veneer that he wears. So if you're talking with your kids, or if you're talking with your siblings, or you're talking with your work colleagues or your parents, every time you put on a slightly different front, you're a slightly different person. It's not you're faking it. It's not that you're not who you are, but you're different when you're talking to your parents, or different when you're talking to your colleagues, or when we're talking like this now. When the Dalai Lama talks to you, he is authentic. He's him. And it makes you drop your own veneer. And the most common reaction around the Dalai Lama is tears. People burst into tears. There's a great photo of him at the very end of his last visit. And he has, we used to get a detail of federal police would travel around with us because he's quite a high profile target. And they were quite worried about like a lone wolf type attack. So we had a dozen federal police would travel around Australia with us. And so there's this shot of him in Perth at the airport, and he's holding hands with these tough old coppers, a dozen of them. And they've seen everything, and they were like these wizened old coppers, and they are bawling. Their tears are falling down their cheeks. And all he's doing is holding their hands. And that's the most common reaction when people are around the Dalai Lama, that they cry. And my theory is that you hold on, we all hold on so tightly to this illusion of who we think we are, whether we're father, businessman, entrepreneur, philanthropist, sibling, best friend. We hang on to it, and we hang on to it tightly without knowing it. And then when you're around the Dalai Lama, he has nothing. He has no veneer. So you drop yours. And that sense of relief of being allowed to let go without even knowing that you cry. It's just so relaxing that you just burst into tears.
Is it almost like pure acceptance and pure love?
He makes you feel like you're looking at a person's soul. So if you imagine that there's two of us, there's almost two of you. There's the deeper you, the deeper I, the deeper soul, the consciousness, whatever you want to call it. And then there's the you that lives on this plane. There's the you that's the mother, the lecturer, the entrepreneur, the philanthropist, the business person. And we have to straddle those two worlds. And the deeper I, the consciousness, the one that goes through many lifetimes, that the Buddhists believe in reincarnation, and it carries on, and it's connected with what Eckhart Tolle calls it the formless consciousness. It's the consciousness that we are all part of. When you're with him, you get a glimpse of the you that you never see. We're so absorbed in our daily lives that we never see the deeper part of us. And he looks at it, and you look at him, and you feel like it's a soul meeting another soul, and you cry. Everyone cries. Anyway, so we veered off. So how that connects with business, the world of business, is that the business community would every visit be very keen to meet with him. And so we would have these functions of 400 or 500 people, and he would talk about money and wealth in a way that no one normally talks about. So he doesn't talk about techniques for gaining wealth. The topic was always chosen by the business community, and it was always like, is business good? Is making money okay? And essentially what they wanted was a tick. And he'd go, very good, make money, very good, no problem at all. But he said three things about making money, that two that I'd heard before and one that I hadn't. So he said it's very important that how you make your money. So it has to be, it can't be with prostitution and drugs, and he's very against tobacco in particular. Alcohol he wasn't so bad on, but particularly tobacco. So he said the way you make money is important. And then secondly, how you spend your money. He said, don't become obsessed with it. It's okay to spend it on yourself, but don't become obsessed with it. The third one, which is the one that I hadn't heard before, it was how much money is enough. And that one I had never heard before, because we're never taught how much is enough. We are always taught to grow, to invest, to build things. Even as an incubator, you're talking about putting a seed in and growing things. You never say when it gets to a certain size, stop. Keep going, grow. Expansion is really good, and just see where it takes you. Whereas he would say, not stop, but he would say, think about what's enough for you. He said, I don't mind if you want a holiday house and you want to go skiing overseas and you want a sports car, all very good. But when you have enough, if you spend any more time making yourself wealthier beyond the amount that you decide is enough for you, then you've squandered what the Buddhists consider a very special incarnation. To be financially secure is a very special incarnation. The Buddhists believe that, because of course they believe in incarnation, and you've had many incarnations, and so they say that what the three main things that drive your life that come from previous incarnations are wealth, so career, health, and relationships. These three things are not created in this lifetime. They all come from last lifetime. So if you are very successful financially, he said it's got nothing to do with what you've done in this lifetime. It's all come from past lifetimes. So they see it, being financially successful, as a very special incarnation. And if you squander it by wanting more and being greedy and not accepting that this is enough and doing more with it, that you will lose it next lifetime and for many lifetimes after that. So they see it as a very special incarnation. And so he wants us, the business community, to go, making money is good, but determine how much is enough. And when you've reached that point, do more with it, whether that's giving it away, philanthropy, mentoring people, whatever else. Don't focus on just growing more for yourself.
So
for me, that was a trigger.
It comes with great responsibility.
Great wealth comes with great responsibility, yes. Yes.
But he articulates it in a beautiful way.
Yeah, great responsibility to look a little bit about beyond yourself. He doesn't even say be philanthropic with it. He doesn't say what you should do with it. He just says determine what's enough, and to go beyond that and to make yourself wealthy beyond your own needs is squandering this incarnation. So for me anyway, that was what resonated with me and was the trigger for Vivienne Court, because I'd been very lucky with Optiver. My story was right spot at the right time. I started it when it was 10 people. It's now 1,100 people and makes billions of dollars a year. So I had enough. So when I retired from Optiver in 2010, first of all, I was too young to retire. I was only 48, and I was like, God, I'll go stir crazy if I don't work again. And I kind of thought, well, I could work at a soup kitchen, I could do on the front line, but it was a waste of my skills and a waste of what I knew. So the idea behind Vivienne Court was to go, well, we know finance, we think we know how to make money. It's trading, it's a very risky area, but I've been doing it for a long time. Why don't we specialize in doing what we do? And why don't we give every dollar we make after bonuses and salaries and bonuses, why don't we give the whole lot away? So why don't we actually create a structure where the whole point of the business is not to line our own pockets, but to actually go into the finance world where billions of dollars slosh around, and if you can create a company that is even minutely successful, you can generate tens of millions of dollars in profit each year. And why don't we do that and create an annuity streaming through to the social sector? I mean, the corporate average is 1%, and in Australia it's a bit less. So corporates donate 1% of their revenue or less to philanthropy every year. Australia, I think it's 0.7 or 0.6 or 0.7.
We don't perform too well across those measures.
No, we're not. Privately, I think we're quite generous, but I think on our corporates, less so. So we set up a company where 100% of our profits go through to the corporate sector, through to the philanthropic sector. So you still get all the fun of trading, and all the traders get their bonuses like any other company. So we're market competitive, but instead of the profits lining my pockets, because I've already made my wealth once, I took the Dalai Lama's message to heart, which is I don't need to make myself wealthier. I have enough for what I need in this lifetime. 100% of the profits flow through to the social sector instead of 1%.
So, I mean, the Dalai Lama was quite influential, it sounds like, in relation to how you approach VivCourt. And how you... Sorry.
Yes. Yeah, sorry, go on.
Oh, no, just how you approached it, and also how you actually, came to the realization that you had actualized and you were successful and you had enough. But now the challenge was, how were you going to do something of value with that money or that power in our society? Because that's ultimately what money represents. That's what it equals. It equals choices and it equals power. And you had the skills to do something with that. So is that basically the catalyst behind what drove you to retire create?
No, I ended up retiring for different reasons. I ended up retiring because the Australian arm of Optiver. So I set up Optiver Australia as an independent company to Optiver, the head office in Amsterdam. And in 2007, we merged the two companies. And so Optiver Australia and Optiver Amsterdam became one company. And then in a merged entity, the Dutch had more control. And I don't know if you know much about the Dutch. They're lovely people, but you don't want to work for them. They're very top-down management and very control focused. And I find Australians are very bottom up and push responsibility a lot deeper into the company, and we trust a lot more, where the Dutch are very much control focused. So that was a little bit about recognizing that a merged entity I had no place in a merged entity. So that was more of a trigger to retire. But no, the Dalai Lama was only one piece of the puzzle. I was quite involved in an organization called Social Ventures Australia, SVA.
Yeah.
And we had been discussing for a long time how they could create an annuity stream. And Social Ventures are made up a lot of ex-Macquarie Bank people that love finance, but wanted to connect head and heart more, and felt there was a disconnect in finance between what you really want to do. So we thought there was a lot of IP within Social Ventures, especially financial IP, and why didn't we create our own financial entity rather than going cap in hand every year to the finance sector and saying, having to restate, like every not-for-profit has to go to cap in hand to the finance sector and restate why they are a good charity to support that year. So it's almost demeaning. And we thought at Social Ventures that the IP was there. Why don't we end up creating our own financial entity and generate our own annuity stream for Social Ventures? So that was a little bit about that was the philanthropy side. The Dalai Lama was more about, don't just try and make myself wealthy again. If I set up a business, don't do it just for myself. So do it with a greater purpose. But the real driver was more of an experiment that I had been thinking about towards my end of my time at Optiver. Optiver was a very fair company. They were very transparent. The bonus pool and the finances were open. People knew where they stood and what sort of bonuses they were going to get. But it still had a shareholder model, which I found really distorted the drivers of the company. So the founder of the company, who still owns most of the shares, is long removed from the company. And most of the original traders, like myself, have nothing to do with the company. I've been out of Optiver for 11 years now, and yet I still have a large equity stake. And the company is still driven to my agenda and the agenda of all the shareholders. So corporations law is set up for the protection of shareholders. Management manage a company on behalf of shareholders. And shareholders add very little to the company. They're not at the coalface. The company is really employees and customers. And the shareholders drive a company agenda. So especially in a publicly listed company, shareholders are openly disloyal. A shareholder will say, I will hold your shares to the next profit announcement, which is either every 6 months or every 3 months. And if you don't perform, I'm going to sell you. So you better perform for me. And if you don't, I'm going to go. So a company is driven to an interest group whose only interest is economic and who are openly disloyal. And they say, if you don't achieve what I want you to achieve, I'm going to sell you shares. And yet a company is made up of employees and customers. And so the employees and customers don't figure it all in the drivers of the business. Employees become a cost center, customers become a revenue source. So a company traditionally squeezes employees to keep costs down, squeezes customers to generate more revenue for the benefit of shareholders who are an interest group, and all they say is, I'll leave you unless you perform to my standards. It's kind of perverse. So you get this bizarre model where you get a business that's driven to the agenda of an interest group that's openly disloyal, openly and adds nothing to the business, especially in a publicly listed company. And legally, management are accountable to shareholders, not to employees and customers. It's a bizarre situation.
Yeah, highly dysfunctional relationship. So if you saw one of your friends in a relationship like this, you would advise them to get out of that relationship.
Yes, I would. I would say leave.
Yeah.
If you could.
And so by changing the model in the way that you did, can you, I suppose, take us on a journey from when you started to do this to where you are now?
So it was a bit of an experiment. So the experiment was, what would a company look like if it had no shareholders? How would it run? Would it run on the same? Would that traditional tension between employees and management still exist? Would employees feel like they were more part of a company? Would managers manage differently if they didn't have a shareholder group sitting over their shoulders saying, you need to manage on my behalf, otherwise your remuneration is going to be affected, or your employment? So that was the first experiment. So the experiment was, first of all, how do we get shareholders out? Because if you're a PTY Ltd company, you have to have shareholders. So who do you put in instead of a shareholder? So we set it up as our shareholder is a foundation. Well, we couldn't actually make it a foundation, so it's a little complicated. It's a charitable beneficial trust. So the shares in VivCourt are held in a trust, in a charitable trust, which means that all the profits flow to the trust, and the trust then distributes those out to charities, DGR registered charities. So it's embedded in our constitution that the only beneficiaries can be any entity that's DGR registered in Australia, which stops it being a corrupted model. It does create its own problems because when you're doing KYCs for overseas entities, they want to know who the ultimate beneficiaries are, and we go, well, it could be one of any of the 50,000 registered DGRs in Australia. So in the rare occasion we've had to print out a list of 50,000 DGRs as the potential beneficiaries and send it off to a corporate entity overseas as part of our KYC. So it creates its own problems. But the idea was to remove shareholders and replace them with a social enterprise or a charitable entity. And really, we didn't need to do it that way. I could have set the company up where I held the shares and we just paid 100% of profits out to charities, but that was then not walking the talk. So the pitch for joining VivCourt was that there was no benefit to me. So I don't draw a salary and I don't draw a bonus. I take no remuneration from the business whatsoever because I already have my dividends and shares in Optiver, so I don't need to. Even though I work a normal day, I don't take any remuneration out. So my pitch was, this business is set up for the employees and also set up for the social sector. So the maximum amount of profits will flow through. If I'd owned the shares in the company, as the company grew in success, even though we were paying out 100% of our profits in to the social sector, because we were making money every year, the value of that equity would have gone up. So indirectly, I would have been benefiting. So I wanted to take away any hint that I was going to be economically improved by the success of the company. So that was why we locked it away in this sort of charitable trust. So that was sort of the structure that we sat around it. But the real driver was there were no shareholders. So we did eliminate the shareholders, eliminate the shareholder now being this faceless charitable trust that has no involvement in the company whatsoever. It's really just an entity for holding the shares. So now we had a company with just employees. We don't even have customers as traders. We trade onto the market. So we provide prices onto the exchanges. So our counterparty is an exchange. So we're not client facing at all. So I was really interested to see how a company would look when managers would manage on behalf of the employees, because there was no one else to manage on behalf of. It's changed it a bit. People are still people, and there's still management, employees, and employees still feel like, you know, they wonder what management does and where the company's going and all that. It hasn't changed it as significantly as I thought it would. A little bit of the tension has gone because they know that there's no one benefiting beyond the profit of the company, so no shareholders that's sort of driving it to a different agenda. The real benefit has been on the social side, the philanthropy side. So being able to distribute profits to philanthropy and to charities and not-for-profits has been, I think, significant, and a surprise for me, because that wasn't the original idea. The original idea was just to remove shareholders. And so the model that we came up with was that most corporates set up a philanthropic arm, like a foundation. So Macquarie Bank has one, and Atlassian has one, probably two of the biggest in Australia. And they have their foundations do all the charitable work. So they go out and research it, they do the donations, they have all the connections. So if you ask somebody at Macquarie Bank who Macquarie Bank supports, probably they might not have any idea. And there's very little connection because they don't actually do the donating. So what we did was we take our profits and we distribute them back into the company. So every employee gets to give an equal amount to philanthropy. So last year, every employee got to donate $30,000, and they choose the charity of their choice. So whether it was domestic violence or drug and alcohol or something to do with kids, they have to ring up the charity. They have to go, hi, I'm Tom from VivCourt, and look, I want to donate $30,000 to your domestic violence shelter. And the reactions have been amazing. There was this guy, Tom, who was an intern with us 2 years ago. And he was still at uni, and he was doing an internship, and he had to donate $20,000. And he said, I've never donated more than $50 a year to Greenpeace. He goes, because I'm a student. So he had to donate $20,000. He goes, Rob, I have to tell you, because I found this domestic violence shelter in Newcastle, and I called them up and I said, look, I want to donate a large amount of money. And so the lady that answered said, I'll put you straight through to the CEO. So he goes, I'm talking to the CEO. So the CEO came on and he said, look, I'd like to donate $20,000. And he said, the line went dead. And then she burst into tears, and he goes, I burst into tears. And she said it was the largest single donation they'd ever had. And it kind of made the fact that he wanted to donate, felt that it justified all the years of work she put in, that she was worthy of it. And he goes, I'm just giving you money. Like I didn't even work that hard for it. And he's gone up there and he's met the board of directors, and he said it's changed him. He said he now donates his time. He's a sounding board for them. He goes up and has lunch. Then he goes, I'm just a student. I'm still at university. And he said, the most amazing thing to me was, he said, if the company does really well next year, maybe I can give more money away to the charity. And in finance, everyone thinks if the company does really well, I hope my bonus is bigger. And his very first thought before he even left uni was, if the company does well, maybe I can give more money away. So the generation, for me, it's the generation of philanthropists that we are breeding in the company, where their first thought is, how much can I give away, not how much is going into my pocket. It's such a significant way of thinking, a change of thinking in finance in particular, where finance is very self-serving. It's about your own hip pocket. How big is your bonus going to be? Is your bonus bigger than somebody else's? And you have people now thinking, how much can I give away? And how much of my time can I now spend in that charity? And how much of the company, how much will they allow me to do that? Is a magnificent way to start your career in finance.
Very different, I'm sure, to the way that when you started in the 80s.
Completely different. Good. Yeah.
Bit of Gordon Gekko.
The Gordon Gekko, greed is good. Yes, yeah. Well, the interesting thing about trading, I don't know if you know much about trading. So we used to be pit traders. So you know when you see shots of Wall Street, and you got the guys in the jackets and they're screaming around and yelling at screens and all that. So that's what we are. We're pit traders. And in the late 90s, they closed the pits and everything went electronic. So a trader's job, the trading, I think, is the most capitalist job in the world. So every other job you do the job and you get paid for it. Like if you're a doctor, you will go and do your doctoring and you get paid. And if you're a lawyer, you do your lawyering and you get paid. If you're accounting, you do your accounting, you get paid. A trader's job is to get paid. A trader will sit in front of a screen, and if they make $5,000 that day, they've had a great day. And if they lose $5,000, they've had a shit day. So a trader's job is to generate your income. There is no job. Your job is to pay yourself. Whereas a doctor doesn't go, I've got $2,000 in the waiting room, and the next day I can see I've got $3,500 in the morning and $5,000 in the afternoon. A trader's job is to sit in front of a screen and go, there's $50, there's $100, there's $200. A trader's job is to pay yourself. So there is no job. So you're missing a function. The only job that's probably more capitalist than a trader's job would be a professional gambler, I think. So, but your job is to pay yourself. So it is missing something. And I think in trading in particular, there's a very high burnout, not because the pressure is high, which it is, and there's a lot of money at stake every time you do a trade, but it's because there's no purpose to it. There's no point to it other than to pay yourself. Your job is to pay yourself. So you turn up to work every day to pay yourself. So it's missing something. It has no purpose. And so that lack of purpose is what creates a lot of the burnout, because as you get paid more and you see your friends doing engineering and medicine and dentistry, and they're saving people and doing really functional things. And as a trader, you're turning up to work and your salary, your pay packet's getting bigger and bigger. Not necessarily because you're doing anything better, but maybe because the markets are busier and more volatile. And you're making that disconnect between what you're getting paid and the value of what you're doing grows as you grow in experience and seniority as a trader. And it tips over as it's going up in your first few years, it's really enjoyable. But as it peaks around year 3 or 4, the disconnect is so large when you can get $1 million bonus. And you've got friends, that did a vet science degree that are earning $100,000, and you go, this is not right. I don't do anything. I turn up, I sit in front of a screen, and I take home this huge pay packet. That disconnect creates a burnout because it's not right, and yet you get paid more for it.
Okay, so there's sort of a soullessness to it. I mean, when people sit around I suppose if you bring it down to the human aspect of it, if you're sitting around a dining table with your friends and someone's saying, oh, this is what happened to me at work, blah, 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 and telling a story of changing someone's life. Like you said, you were talking about dentists and not so much the dentist, maybe we'll go to the doctor, the vet, but they've got a huge impact on the people around them. And then you're just sitting there sort of thinking, well, I can tell them how much extra money I brought home this year vis-a-vis year on year last year. So yes. Is that the only story you have?
Yeah, it's. I mean, look, I don't think an accountant saves people's lives and changes the world for good, but you do a job. You have a function and a purpose. And I think deep down as a trader, you have no purpose. You can say I add liquidity to the markets and I allow people to hedge risk, but no trader sits in front of a screen thinking, I'm adding liquidity to the market and I'm allowing somebody to hedge risk. A trader sits in front of a screen to make as much money as they damn well can on that given day. That's their purpose.
Okay. There was an interesting question too from Bernard. Is there enough for VivCourt? Is there a sense of when that's enough? Because ultimately you're creating wealth in that scenario to impart good.
I think the aim of the company, so it's a good question. We haven't thought about that. I think the idea is to create a different model. So it's not a better model. So maybe in my blurb, when I wrote somewhere that I think it's the only sustainable model of the future, is probably a bit of overreach. I think it is creating a different model. So there are plenty of people that just want to come out and rip into the markets when they're 22 and make a couple of $1 million and go, that's fine, I'll buy my car and I'll retire. Also good. And obviously for companies like Macquarie Bank and JP Morgan, they make billions and the model works very well. So it's not that it's a broken model. It's that it's a model that carries a cost, a human cost, which I don't think we factor in. Most of these firms have a model where people burn out within 5 to 10 years. So they want a 5-year turnover, particularly in trading. 5 years, a whole lot of people generally hit, there's generally a turnover around the 5 to 10 year mark in trading. And traders in particular, developers are a bit different, but traders in particular. And the business wants that. You know, if you get consulting firms, you know, you don't often get people working beyond 4 or 5 years in a consulting firm. They're burnt out. They're doing their, you know, 12, 14-hour days. And the model wants that. You know, you want that turnover because you want fresh graduates in. But that burnout is a human cost. It's a bit like a carbon tax. You know, the cost of a cup is not the real cost of a cup. There's a carbon in there, which, you know, we wanted to bring in as a carbon tax with Rudd, and it never, or Turnbull wanted to bring that in, because we never have the cost of pollution priced into the products that we produce. It's not a real cost. The rest of the cost is borne by the community. It's the same in finance. There's a cost to being an employee, and the cost is that companies generally want you to leave after 5 to 10 years because they want the fresh graduates in with the new ideas, new energy, new motivation. And that cost, when you leave as a trader, after 5 years, you'll burn out as a trader. You are not good for anything else. There's very few traders that are 5 or 10 years in that can rebirth themselves into anything decent. And the qualities that most trading firms want are the alpha male, the driven, aggressive, egocentric person that's completely myopically focused on making profits, very low EQ. These are the people that end up rising to the top, whether it's in trading or other areas of finance. So you're a terrible person. You've got terrible life skills. You're a terrible partner, a terrible husband or father, because those qualities are not nurtured in a company. The company doesn't. Most companies say, you come to work and I'll pay you for your time. For the time you're at work and how well you produce at work, you get paid. So that is our contract. And it's in a written contract. You come up, you do your 12-hour days, and I'll pay you for it. But I think there's a social contract which underlies these actual work contracts, which is not acknowledged. And the social contract, I think, is that companies have a responsibility to do more. They have a responsibility to grow you as a person beyond economically. And they don't. They don't want you there. Not only don't they do it, they literally don't want you there beyond 5 or 10 years because there's another fresh cohort coming through that they want in your place. So they take more from you. So you turn up for work and you do your time. You bring all of you to work, all your emotions, your developing personality, you're straight out of university, you're very moldable. They don't want any of that. They just want your time and your knowledge, and they pay you for that, and they think that's a fair transaction. But they don't turn you into any sort of productive person. They don't teach you values. You know, companies might have their corporate values, but they don't nurture you. They don't want to keep you around. They don't necessarily want you to be any better person, because those qualities don't necessarily make money in finance. The qualities they want are the driven alpha males that stand at the top. That is still very traditionally the finance world. And so it requires more of a company to want more of you as a person. So I just can't want more of my employees. I also have to create an environment around them where that is also valued, rather than just a lip service. So I want people that have more EQ skills. I want people that look at philanthropy, that can look beyond their own means. I don't want people working a 12-hour day. I don't even want them working a 10-hour day. I want them to have work-life balance, but that comes with a cost to the business. Because if we have 100 employees and I say to my employees, I only want you working a 10-hour day, and our competitors have 100 employees and they're working a 12-hour day, every day there's 200 more employee hours going into that company than into my company. And so they're going to be ahead because they've got 200 more hours every single day going in. But I think the cost over time will ultimately weigh down on that company. And I think it'll ultimately be a less successful model, but it does require time, because we're going to be behind to start with, because our people go home after 10 hours. They're going to be at home, not working on the business. And I want that, but it means that we start behind the 8 ball relative to everyone else. But I think, well, my theory is, we'll see in 5 or 10 years that will flatten it out. And I think when you have older employees that have work-life balance, so they burn out less, they're they're lower error rates, they're better people, they don't fight with their partners. So when they come to work, they haven't had a stressful time at home with the wife and the kids or the husband and the kids. They bring more of themselves to work. They've got a broader perspective. There's more creativity. I think you get more productivity because in a 8 to 10 hour day where people are happy, they're way more productive than they are in a 14-hour day where they're feeling bitter and burnt out.
Yeah, well, that's the way I view the world. I mean, not all hours are equal. If you've got someone that's burnt out or they're unhappy, their performance will go down. So even if they get an extra 200 hours, are there more mistakes in those hours? Do those mistakes extrapolate out into bigger losses? Are their decisions compromised? I mean, that's all really interesting stuff, and there's lots of research happening around that space at the moment, which I think is also something to watch. Have you seen this change in VivCourt in relation to what you saw in Optiver versus VivCourt, and how have you seen that? And also, how's the company been growing? How many people do you have in the company now?
So, well, definitely, I think we're a victim of my first part of the theory, which was we're going to be behind relative to competitors, because we're now 9 years in, I think, and way behind where I thought we would be. But maybe I was I'm a bit of a glass half full person, so I assumed we'd be way ahead than we are. So we're 100 people, and I would have thought we'd be around 200 by now. And I do believe it's because we don't push our people. So I don't really believe in pushing them. I don't believe in we don't, for example, we don't have contracts. We just have a handshake. So when you start with us, there's no contract to sign. It's a handshake. And the reason we do that is that their very first experience I want people to have of us is that we trust them. So an employee, a contract is written only for the protection of the employer. Yeah. It's literally a list of things you can't do. And if you do it, here are all the punishments that will flow from it. So it's other words saying, Melissa, I want you to join us and you're going to be a valued employee, but I don't trust you at all. And here's a 25-page contract for you to sign that which proves I don't trust you. So it's a terrible way to start when you think about it, because it's all about distrust. Yeah. So when you start with us, it's a handshake. It's a trust. And I'm sure it's going to bite me in the ass at some stage where somebody will steal a bit of IP or whatever. But I think the benefit we gain far outstrips the occasional times when that trust will be broken and breached. So you treat them as like a colleague. So what we say when people join is that you're not an employee, you're a colleague. And I trust you. So if I trust you not to steal my IP and to treat us well, then I also trust you to work effectively and to decide what hours you need to work and how you want to work.
So what does, I suppose you had your stretch goal when you started, what does, say, the next couple of years, what are you envisaging? And what does success look like?
So it's beginning to find its feet now. So coming up to 10 years in, we've generated probably $60 million for charity so far, of which we've distributed about 10, and 50 we've kept in the company to build our capital base so that we can trade bigger positions and make more money. So relatively, I think if you look at traditional businesses, to say you've made $60 million is a lot of money, but in trading it's not. It's significant, but it's not enough. And I think that we've now got a team together where I think people are buying into the idea and understand the concept of the company, because it's quite hard to describe it. It's something that you have to live as well, and it shows more through your actions and what you say. We've kind of found our niche and how we want to operate, and I would say I'm looking at sort of exponential growth for the next, say, 5 or 10 years in terms of the type of people that come to us. We're just getting a bit of a reputation as about saying, well, you could join Optiver, you could join Macquarie Bank, you could join JP Morgan, or you can join us. And if you join us, the idea is that the amount of profit that we give our employees, we give a larger profit pool internally than most finance firms. They give something like 30% of their profits get allocated to remuneration. We give 50 because we believe that you need people and you need capital, and each are equally weighted. So we give half our revenue our revenue goes to employees, and then what's left over is company profits, and all of that is retained by the company to either give out to charities or to grow the capital base. So the pitch that we're beginning to get out there is, you could say you can join Macquarie Bank, you can join all these other firms where you work for a lower profit take, and you try and any extra money you make goes into the pockets of the founders or shareholders, or you can work for us where you get a high profit take, your hours are shorter, and your hours are shorter, and every dollar you make is also a dollar you generate for philanthropy. And people are beginning to come, and people are going, well, yeah, I kind of like that model. I like the idea. It's a bit of an experiment, and it might not work ultimately at the end, but I think it will, because I think people are drawn to looking for a little more, genuinely more out of work than just a pay packet.
Yeah, I think we see that in the university sector as well, as there's been a huge shift with the new generations, and they're not looking to work for the most successful company in the world. They want to work for a company that has a conscience, and they're actually going to work to do something and creating some kind of positive impact in the world. So I think that the new generations are definitely going to be drawn to organisations such as yours, Rob. And I think that your vision for that, and the fact that you've been doing what you've been doing, is an incredible testament to yourself as a person. And also the fact that you've learned so much along the way and have been able to implement it, which is just amazing, to give people an opportunity to work for an organisation such as yours in the financial services. Like, it's just crazy. Like, there's not, 10 years ago when you were thinking about doing this, I mean, how many people would have been going, yeah, Rob, go for it, or would have been sort of sitting on the sidelines going, he's nuts.
Yeah, no, it's a tax dodge. Most people are like, it's a charity. It's a tax dodge. You're doing it just to save taxes, I think was the most common response. Yeah, just so you don't have to pay tax.
That's just the way of the world, I suppose. And you know what I mean? No one really thinks that anyone's got anything else at heart except for what's good for them. The whiffum, I suppose, is what a lot of people refer to it as.
Yes.
Is there any questions instead of people typing things in, does anyone want to come off mute and ask Rob a question while we are lucky enough to have him with us? No one coming off mute? Come on, Lisa.
Hi, Rob. I have a question.
Morgan's got one.
Yes, I have a question on so existing businesses, status quo. Do you think it's possible for a company that is currently a shareholder-driven business to be able to pivot to a point where they are similar to what you're doing with the VivCourt? Or is it like you're locked in, you'd have to burn it and start again?
I think it's really hard. Because I think when you start this sort of business, you have to be willing to give away your IP. So the IP that we had in terms of knowing how to trade and knowing strategies, we had to willingly give away. And everyone that's joined, no one's taken an equity stake. Of course, there is no equity. So everyone has kind of given their IP away. And that's kind of a hard thing to do. And I don't know how you pivot from a shareholder model to essentially sort of a social enterprise model. What I would say is that there's no harm in companies moving up their 1% corporate donations to 2%. And what we do chat, like we were talking with the ASX last year, and they were also lamenting the fact that there's a lack of engagement between the employees and philanthropy. They just can't get any buy-in. And we suggested to them that they make like $1.5 million a year in donations through golf days and things like that. And they got 500 employees. And we said to them, why don't you give every one of those employees $3,000 to give away? It's a lot of money, because most people don't donate more than a couple of hundred, or even $1,000 is a lot to donate. So if you gave every employee $3,000 to donate, it requires a little bit of bookkeeping. But that would be incredibly stimulating, because they get to give it to their own charity. So they get the thrill of knocking on the door going, I want to give you $3,000. And people are like, who the hell are you? That's a lot of money. And they go, wow, how fantastic is my company? It allows me to give its money away to a charity that resonates with me. It's a fairly simple thing, but I think that would be an easy first move for corporates to do. It does require a little bit of administration, though.
Yeah. Thank you.
I have a quick question.
Thanks, Lisa.
I love what you're doing, Rob. I actually have a bit of a philosophy behind a startup that I've had launched for a year, and it's about helping community, but at the moment it's just a property portal. And so I wasn't sure which way to go, because I really didn't want a PTYT Ltd, and I didn't want, I wasn't sure, and I thought social enterprise might be the way. Is there much information on how to set it up? Because I'm just going from, sole trader now myself into that. Can I find much information?
Yeah, it's a good question. We just sort of stumbled upon this through trial and error. As said, we originally thought that I would own the company as a PTY Ltd and that we would just donate profits. But then I thought if it was successful, the value of the company goes up. So I'm secretly getting wealthier when I'm telling people I'm not. So I would still say do PTY Ltd just because it's simple. The hardest thing about our model has been KYCs. Everyone needs a KYC, and to explain to them that the beneficiaries are any charitable DGR registered charitable entity in Australia, and there's 55,000 of them, has been really difficult. Sometimes it's taken us a year to onboard, especially with foreign companies that don't understand trusts. I don't think anything wrong with a PTY Ltd model. It just depends. It just gives you complete control. I probably would revert back to that if I had my time again.
Okay.
Because it's created lots of problems, but it does allow us to literally, well, me anyway, to walk the talk and say, I'm not getting anything, as I don't get a salary, I don't get a bonus, and I don't get anything out of this company. So it gives me sort of some credibility.
You need to stay as a single shareholder to have.
I would say, yeah. I like the benevolent dictator model where, you keep control.
Yeah.
Yeah.
I met the Dalai Lama. I went to the happiness conference when he was here in 2015, and he's an amazing. He's amazing.
Amazing. 2015. That was a great one. Yeah.
Yes, it was.
The happiness conference. He was really in good form then too. That was the best I'd seen him. He was really healthy, really robust, he'd just come off a 5-day retreat in Katoomba, in Lura, and he went straight from that to the happiness conference.
Thanks for today.
Yeah, you're welcome.
Yeah, thank you very much, Rob. It's been a pleasure. I could sit and listen to lots more stories, and I'm sure you actually have lots more stories about people coming into the business and having those awesome stories that Tom had with that domestic violence group in Newcastle. I know for me, having that opportunity as a young person coming out of university would have been a life-changing experience. And I think that anyone that is able to give people a different perspective on life and give them another way of looking at what success means is a wonderful gift that you're giving people. So congratulations, and thank you so much for being so authentic and sharing your journey.
Thank you. Yeah, you're welcome.
So with that, I think we will bid farewell to Rob, and you can get back into creating more impact and trading for good.
Thanks a lot, Melissa.
Thanks,